All right. Hello, everyone. Tim Davis coming to you guys with a quick market review. And today is August 21st, 2023. It's on a Monday evening, and time is about 5:50 p.m. Eastern Standard Time. Want to first start by taking a look at the SPXA 200R, which again is the tool that I use to monitor the amount of stocks in the S&P 500 that are trading above their 200-day moving average. This pretty much gives you a general idea what the overall sentiment is of the market. And one thing I want to point out, I want to switch to a weekly chart first. All right, again, the highest you can get is 100% of stocks trading above that 200-day moving average. Anything when you're hovering around that 50 level, 50%, overall sentiment or market is shift in any direction. All right, with that said, so this is where we're at right now. And you'll notice that we are now below the, right at the 50% level of stocks trading above that 200-day moving average. So that means we approximately got about 50% of the stocks in the S&P 500 company. It's S&P 500 trading above the 200-day moving average, and then we got 50% that are trading below the 200-day moving average. And I want to highlight something here because we're right around a level of support. See, we're right around a level of support. And generally, for the last time we got around this level, we was able to find or see some type of bounce. But prior to that, previous levels, we got close to this level, and then we dipped. Both of these, we dipped down and created another little low, but we ricochet right back. Same thing here. Dip down below this level of support and ricochet right back. So now the question is, do we do the same here? Do for some reason something happens where we dip much lower, hit the bottom trend line and bounce? We have to wait and see. But I do think there's still more room to the downside. Looks like we're getting close to an area where we could see some kind of bounce. Then we have to see if we do get a bounce in this particular tool. We have to see, where does it go? Where does it go? The last couple times when we had significant bounces, we traveled back up to the high point of the range. But now we're at the low point of the range. Low point of the trading range. This has been the entire trading range since beginning of the year. So now the question is that what happens the rest of this week? Do we finally test this level of support, break it, test the level of support and get a huge bounce back? Or do we just break this and continue to go down? We have to wait and see. Right now, we are at a critical juncture for the S&P, bulls to see some type of meaningful rally to keep from going overall market going much lower. They want to see this percentage. They want to see this percentage tool bounce back above 50% in a major way, and and sustain itself. But right now, it's like there is a struggle between the bulls and the bears. We have to wait and see how this week's going to pan out. Okay, let's look at that tool now. Let's switch straight to the actual S&P 500 itself. And here is a weekly chart of the S&P. And as you can see, we're right around the 20 per moving average on this weekly chart. But price action is traded down too. It looks like it wants to try and bounce. We have to see what happens. This right now, this 50%, this 20%. I mean, this 20 per EMA is acting as a level of support. So, do we hold this level this week, or do we break below it? That's something to pay close attention to, and we have to wait and see. Look at a daily chart, S&P. Again, we are in. Look at that. This is a little different from the weekly chart. We're in some sort of temporary oversold conditions. In the full stochastics, in the Williams percentage, and in the CCI, all in oversold conditions. So there's a huge possible chance that we could see a rally or bounce. Now with this 20 per moving average. So with this 20 per moving average doing what it's doing, sort of kind of overtook price action, and now price action is trading below the 50 20-day moving average. So what happens now? Do we rally and break back above it? Or do we continue to rally, hit it, and then go back down? Hit it, and then go back down. That is more what I'm leaning towards. I think this 20 per moving average will start to turn lower. So we have to see what the week brings. All right, so that wraps up our S&P. Let's go straight to the Dow Jones. Let's do the Dow Jones real quick. All right, Dow Jones, same scenario, right at a level hovering around a level of support. And we have to wait and see, do we get a bounce here? Right at a level of support with the 20 per moving average overtaking price. And now price action is below 20 per moving average. So does it act as a level of resistance? Do we bounce and get a rejection by the 20-day? We have to wait and see. That is a huge possibility. So that's our Dow. Remember that, folks? I was thinking about something here for a second. So that's our Dow right at this level of support. So we have the 20 per moving average that has overtaken price. So do we get a bounce up to that 20 per moving average and then rejection? That is a huge possibility. We have to wait and see how things pan out as we go through this trading week. Now I'm going to switch straight to the Nasdaq daily chart. Here's a Nasdaq, same scenario, starting to get a little bounce. There's a buy signal showing up in the CCI. So we could see a continuous bounce or a standard rally in this tool in the Nasdaq. Again, price action has been overtaken by a 20 per moving average. So do we get a rally up to that 20 per and then get a failure? We have to wait and see. That is a possibility. Let's take a look at the Russell. Same scenario. Russell was dipped below a level of support, another level of support, and looks like it is trying to rebound at this point. And with the again 20 per moving average already overtaking price. So question again: do we get a move up to this 20 period and get rejected, or do we get a move up to 20 period, break through, and continue out to new highs? I would say I'm betting on the latter. All right, and that is it, folks, for tonight, with the exception of the VIX. Take a look at the VIX real quick. Here's our VIX. And just like it's opposite of the markets, VIX is trading above its 20 per moving average. It looks like it wants to pull back towards it. So the question is, do we pull back towards it and hit it and bounce? Or do we pull back towards it and continue to drift lower? Excuse me, folks, we had to wait and see. We had to wait and see. There are definitely some sell signals starting to pop up here with the VIX. All right, I think this week is going to be a very interesting one, folks. I think it's going to be more volatility. So hold on to your hats and just be prepared to adjust your positions accordingly. Until the next video, Tim Davis is signing off. Enjoy the rest of your day and enjoy the rest of your week. Again, I might not be with you guys this weekend because I will be out of town for a bit. So, but when I come back, I will be paying attention to the markets. And if I see the need to do so, I will do an updated market review. All right, folks, check you guys on the next video.